Hey folks, hope you all are doing well. I'm Karan Bandal from Econosite, your weekly wrap on economic news from India and around the world. So let's get started with price rise issue. India's retail inflation remains elevated. We know that the RBI, that is Reserve Bank of India, has a tolerance range of 2 to 6% for India's retail inflation. Meaning this is where they aim to keep inflation through the use of various policy tools at their disposal. And it appeared late last year that RBI was gaining control of retail inflation with November and December 2022 readings below 6%. But for the last 2 months, inflation has breached the RBI's acceptable range. February 2023 CPI reading, CPI is Consumer Price Index, came in at 6.44%, only slightly lower than January CPI. So, with India's inflation continuing to disobey, it increases the likelihood of a 25 basis points rate hike by RBI during their next policy meeting on April 6th. India's main rate currently sits at 6.5%, which is quite high already. In effect, this will likely put further pressure on India's growth potential for the upcoming financial year, on top of issues caused by a slowing global economy. Now to compare, let's look at inflation in the US. US inflation also dropped slightly in February 2023 to 6%. You can clearly see a definitive downward trajectory here, and hopefully that will continue. US, however, has a much tighter inflation target. US Fed, that is the central bank in United States, targets retail inflation of 2% or less. So 6% is still far off from the Fed's target. If you look at core CPI, which excludes volatile food and energy prices, even that came in at 5.5%, not much better. Based on these inflation readings, as widely expected by the markets, US Fed will likely go ahead with a 25 basis points rate hike during their policy meeting on March 21st and 22nd. It looks like the banking scare last week caused by the collapse of Silicon Valley Bank has lowered the likelihood of a 50 basis points rate hike significantly. Either way, US main rate will likely go higher, exacerbating the global growth concerns. Back to India. Consumer durable firms in India need manpower. Job prospects in the consumer durable sector are looking rosy. Global warming is raising temperatures in this part of the world higher than the norm and earlier than the norm. So, with the early onset of summer season, most consumer durable companies are expecting double-digit growth in 2023, especially in the segments dealing with cooling systems and products. For example, Panasonic experienced a 35% growth year to date this financial year and expects the momentum to continue. Johnson Controls Hitachi Air Conditioning is targeting a 25% growth in the first half of the upcoming financial year. Haier India is also looking at double-digit growth in the air conditioning segment, and Godrej Appliances is targeting a 40% growth this summer from the entire set of cooling systems like air conditioners, refrigerators, air coolers, and deep freezers. So, to serve this demand surge better, most of these companies are embarking on a hiring spree. These firms expect to increase workforce by up to 30%. Hiring should begin in March 2023 and continue till the month of June. Firms will add both temporary and permanent employees. Typical roles that will be filled are frontline sales, service representatives, and skilled manpower at the manufacturing facilities. With trend moving towards automation and digitization, the focus will also be on training and upskilling the workforce. Finally, hiring will be heavy in big cities like Mumbai, Delhi, Bengaluru, and Chennai, but will not just be limited to these Tier 1 cities. Significant recruiting will take place in Tier 2 and Tier 3 cities. On a similar note, let's look at Apple's contribution to job creation in India. Apple's investment in India is growing as it moves towards reducing manufacturing dependence on China. According to Economic Times report, this move may lead to the creation of approximately 1,20,000 jobs in India in just the upcoming fiscal year. 40,000 will be direct positions in manufacturing and 80,000 will be indirect roles. Retail will contribute fewer jobs as majority of the jobs will be focused on the manufacturing side. And this trend is expected to continue. By the fiscal year 2026, jobs figure is expected to increase to a minimum of 3 lakh new jobs, where 1 lakh will be direct roles and the rest indirect. Let's end with China. Chip-related sanctions bite China. Customs data released by China on March 7th points to a slowdown in China's imports and exports. This may be the reflection of the impact of US sanctions on the export of semiconductor to China. US has teamed up with South Korea, the Netherlands and Japan to have their semiconductor-centric businesses restrict activities in China. As a result, for the first 2 months of calendar year 2023, China's imports of integrated circuit declined by 26.5% and imports of semiconductors dipped by a whopping 45.1%. During this period, China's largest trading partner was ASEAN bloc, where trade increased by 9.6%. Its second biggest trading partner was the EU. Here, trade fell by 5%. And in the third place was the United States, where trade dropped by 10.6%. On a global level as well, the decline continued. China's total exports were down by 6.8% for the first 2 months of 2023 to $506 billion roughly. Did you notice that even with this contraction, the scale of China's trade, especially the scale of China's exports, is massive? Sticking to goods exports, what India exports in 1 year, China achieves that in just 50 days. Having said that, the US sanctions are clearly having an impact on China's export-dependent economy. In summary, inflation remains stubborn in Western world and in India. That means central bank interest rates will remain high. For India, this creates growth challenges. After a decade of surplus liquidity in the global financial markets, capital now has become expensive and rare. Will India be able to attract it? For India, the downside of higher interest rates is somewhat cushioned by the supply chain diversification move away from China by major multinational firms. I hope you enjoyed this week's wrap. I'll speak with you again next week. Until then, take care.